And we're back making some videos on YouTube. Now, you guys might not have known, but actually for Monday to Wednesday, I've actually been away with work. But you guys might not notice that because I did do a little bit of pre-recording videos on the Monday and Tuesday. So yeah, to you guys, it seems like I've been here all the time, but actually, I've not actually recorded a video actually since Sunday. So my first video for a few days. So the Fed, we talked about this on Monday. We said that this is the big event for this week and will be the key driver of where the markets go. And I gave a prediction, you know, if you had a bingo card, and I said this is probably what's going to happen. The Fed will raise interest rates in line with what the market's expecting, and they will leave themselves open that they can either bring the interest rates down if they want, or if they want to keep them high up or keep increasing them. Exactly that happened to a T. There was absolutely no surprises at all, and that's what the market thought. They were kind of like, oh, like you did exactly what we thought once again. There were absolutely no surprises, but there were a couple of interesting points that I'll point out that potentially what the market kind of reacted on. As you probably saw, the S&P 500, it was down at 1.65%. And a lot of that came during Jay Powell's speech, and you can see here that's where the market really did tank off to the end. We was actually when the actual statement came out, everybody was kind of happy, like, oh, you know, everything's going how we expect it to happen. There were no surprises, and you can see here like we were up a little bit from that time frame, and then if you actually take out from the highs to the lows, the actual drop was 2.4%. So what kind of happened to cause the drop there, and why did we kind of initially spike up and then dive? And we're looking at what potentially could happen in the future, because basically everything that happened during the time of Jay Powell's speech and the interest rates, there was no surprises. So there was nothing new for the market to digest, and that's what the market was kind of, you know, trying to look at. So if we have a look at what happened originally through the Fed statement, the market was quite happy with the statement. They talked about how strong the banking system currently is. They said that potentially they changed from the committee anticipates that ongoing increases in the target range will be appropriate. They changed that to some additional policy firming. So that was a massive change. That was very dovish from what we've had previously, that there will be interest rate hikes to there could potentially be some. So the market really liked that, and that was probably the main drive of why the stock market originally, when we had the first statement come out, that was actually quite bullish and everyone was quite happy originally with what happened, and that's why the markets actually jumped up a little bit, because of that little bit of dovishness. We were looking for Jay Powell to give some dovishness to the market, and that's what happened. Now, next thing, the market then started to drop slightly, and that was because of the economic projections that was then given by the Fed, because we did get some updated projections for the first time since December from the Fed. Now, the big change really is that they saw the federal fund rate basically stay the same or a little bit higher than September, but no change since September. The big thing is that a few people were hoping to see that potentially come down, so the Fed were going to signal interest rate hikes to the back end of the year. Now, the Fed are definitely not going to be doing that. They're definitely not going to be projecting they're going to be cutting rates to the end of the year. They're not going to put themselves under that sort of pressure. But I think a few people were staring at the number and going, are they going to update that potentially where they could lower that? And that was never going to happen. The people thinking that was going to happen are absolutely crazy. The big thing is that from the December meeting, they actually said that potentially if they were to do the projections this time around in February, that they would have potentially moved this higher. And you can see here that they must be really happy now where inflation is coming down, because they didn't do that. So that was a big change from the last time. So that was actually really bullish and really dovish that no one really picked up on. The next thing that was the big change was the actual GDP projections. So if you have a look at the September one, that was actually 1.2% for this year. Now, that was actually downgraded to 0.5%. And you can see here that the September was 1.7% in 2024, down to 1.6%. And you also be able to see that the inflation as well was a little bit higher in 2023. So they're also projecting that inflation could potentially stay a little bit higher through the year than what they were expecting. They're also expecting the economy to be a little bit weaker now. So originally that's what everyone kind of picked up on. Oh, the Fed is signaling that there potentially could be a recession coming now. The Fed are going to cause a recession. It's even in the projections now. And that's what everyone's kind of panicking on. But same again, we've seen these numbers before. We've seen the numbers previously where there's been all these projections and they don't hit the projections. You know, if you look at previously, you know, we were supposed to be having a major recession right now, and we haven't been having a major recession now. Why have we not been having the major recession now? Because unemployment hasn't ticked up. People thought unemployment would start ticking up, and it hasn't. And if you still look at here, there's still not a major increase in that unemployment going up. Now, it has increased a little bit since that September, but there's not really been that much of an increase. So same again, I don't know. You know, this is, everyone's trying to guess the numbers, and they're very, very hard to predict whether they're going to be a 0 point something here, 0 point something there. We've seen these numbers come massively incorrect before, but there wasn't that much of a change. But a lot of people were focusing on this number of the GDP being forecast to be a lot lower than what was expected previously, and that's kind of what caused a lot of the market to go down. And then obviously we had Jerome Powell. He did a little bit of his speech. Same again, he didn't really give too much away. He said that potentially, you know, confirming what we said there, or the economy could get a little bit worse this year. We could potentially still hike up interest rates. He didn't give any signaling to a direct pause at the moment. He was never going to do it. He has, in the last year, he has never backed himself into a corner where he's going to be pressured going, oh, when we questioned you a few months ago, you said that potentially this guy, he's not going to do it. So that's what the market didn't like, and then that's why the market actually, you know, sold off towards the end. And that's why when you look at what the market is forecasting, the market is currently forecasting that potentially we have one more hike in the next Fed meeting, potentially. But from that point of view, we are going to see then interest rate paused, and then through 2023 we could see 4 cuts on the interest rates. That's what everyone's expecting for the Fed to do to the back end of the year. They are expecting cuts to happen. So you can see here at the moment from what Jerome Powell's saying and what the market is expecting is quite a gap away. And that's what the market once again didn't like. They didn't like that the Fed, Jerome Powell, did not give anything away, and that's what caused the market to sell off, especially when the mention of potentially a weaker economy. That's what caused the market to dive, and the market was like, hey, we don't like this, we're going to sell off a little bit at the moment. I thought the market sell off was a little bit crazy because we kind of, what was there was nothing really crazy that was out there. There was nothing unexpected, and I was really surprised to see the market sell off as much as what it did. I thought we would be exactly flat on this news. Now, looking at the market at the moment, the pre-market is suggesting that we are going to have a bit more of a green open. Obviously, that could change dramatically by the time you guys see this video, but that's what I would potentially expect. I would think that the sell-off was a little bit aggressive here, and we should see a little bit of a rebound to where we are towards a bit of a break-even point of view. I didn't think there was that much of a game-changing news out there, so we'll see what happens there. But overall, my thoughts is that at the moment you can see what market is thinking, and the Fed are quite, you know, far apart. Ultimately, when I look at inflation here, inflation has started to get really drove down massively. You know, we're at 9.1 through the middle of the year. We are towards the 6. Obviously, we have the next inflation data coming on the 12th of April for the March. You can see here at the moment, Trading Economics have that down to 5.8%. So at the moment, we are going to enter the 5% range. Now, obviously, give that a couple of months. By the time we get towards summer, we will probably more than likely be entering into the 4% range. And then potentially by the end of the year, we do start to move potentially down to the 3%, potentially down to the 2%. We'll see what happens. Obviously, the housing market could get a little bit weak. That could potentially cause deflation. That would obviously really help. You know, oil potentially keeps coming down. There's still a lot of things that potentially could come down to the back end of the year where we do see us moving towards that 2% target that the Fed are wanting to see. And from my point of view, I think we will see the pause in interest rate hikes very soon. Now, in my opinion, the ultimate question that everyone's kind of battling on in the short term is the pause going to come the next meeting or the meeting after? That's what everyone's kind of waiting for. Are we going to get the pause in May or in June? That's what everyone's kind of debating on. That's not a major issue if we get the pause in May or June. That's not really a big issue. I think we'll get it next meeting, because by the time we get to the next meeting, we'll have 2 sets of inflation data out there. That also helps with the risk of potentially, if we have a set that's a little bit, you know, not great. That's what we actually had, if you remember, in January time. We didn't have great inflation data, but that was okay because when we got round to this time round, it was back in the positive direction. So, I mean, by the time we get to March and April, And we probably should be in the 5% range, maybe 5.8, 5.7. Potentially then we put that down to 5.5. We're going to be very soon, potentially towards July, August time, we could be in the 4% range. So when we start getting towards the 4% range in July time, you can see here people are going to be looking and going, the Fed are going to start cutting interest rates, inflation is going to be beaten, we're going to start moving down. Now, I don't think we'll see the Fed cut until we do start touching the 3% range. So I think that the big thing here is that I think the market will have to adjust slightly, because I don't think we're going to start getting cuts this early. So I don't agree with what the market is thinking here. And obviously the Fed are currently projecting for no cuts this year. So I don't think we'll get this. But when we do start getting towards September, and when we start getting to November and December, I think at that point, if the economy is going to do what the numbers or the GDP growth that the Fed are projecting, and we do start getting weaker growth here, the economy does start weakening, and inflation is starting to come down, I do think we could see the Fed start cutting by the end of the year, which is not in the projections. And I think Jerome Powell has also left that room potentially that if we do get to that point, he will cut. The pressure is building. You've seen it in the amount of people that are saying Elon Musk, the articles out there from different news articles, publishers that are calling for Jerome Powell now that he needs to start cutting. You've had the issue with the Silicon Valley starting to weigh on top now. You've seen the market trying to pressure him a little bit with the dump off or when he started speaking. The pressure is building. The economy isn't going to hold up forever at these higher interest rate hikes. He will have to pivot. And when he pivots, and that is only going to be 4-5 months away from now, when the pivot happens and the market is future thinking, we know that the interest rate hikes are going to stop in the next coming 2-3 months. So you're going to have the pivot, you're going to potentially have the interest rate hikes start coming down potentially towards the back of the year, and you start looking at the environment that we're in, where we haven't hit the recession that everyone wanted or thought was going to happen. The economy's held up okay. In my opinion right now, we are in a very good place as investors. I think when you look at this, what stock prices are at, and you think the market is future thinking, you're starting to think, okay, by the end of the year, what position are we going to be going in 2024? We're going to be in a place where we haven't had the great recession that everyone talks about. You've got the Fed that are going to start pivoting. Interest rates are going to start coming down. I cannot understand right now why people... I don't understand anyone that has the view that stocks are not a good time to buy right now. Because when you start looking 6 months down the line in 2024, I think at the moment, things look in a very, very good place. And I think it's a matter of time before everyone and Wall Street starts clocking on that, oh, we're in a good place right now. The market's probably going to be a very good 2024. Interest rates are coming down. We haven't had the recession. The economy's holding up. It might get a little bit weaker, but it's not the great recession that everyone was talking about. I can't understand that is not bullish at stocks right now, because everything looks pretty good. The only big argument that we have at the moment is, do the Fed pivot in the next meeting or the meeting after, and do the Fed cut interest rate hikes at the end of the year or just after the summertime? That is the big argument that we have now. It's a couple of months in between what actually is going to happen. But ultimately, them few months aren't going to make a difference, because the outcome's still going to be the same. And it looks very positive for stocks at the moment. So we'll see what happens here. But overall, there were no shockers. If you had a bingo card and you put down everything that you expected to happen, it happened. But ultimately, for me, the information that we have at the moment is positive, and it looks good for the moment for stocks. So that's where we're at the moment. And like I said, I thought the sell-off yesterday was the market should have been flat. There was nothing new there. So I think we should have a good day today, because the market sell-off was stupid, and we should have a rebound because the news that we had wasn't anything new out there. So the ultimate thing is guessing when is the pivot going to happen, I think, ultimately. So I hope you enjoyed the video anyway, guys. Catch you in a bit, and thanks for watching. Smash the like button.